So I'm very pleased to be presenting to you a session on M&A with the renowned and esteemed Christian Tirabassi, who's one of the most well-known and respected investment bankers and advisors in the industry, and is going to share some nuggets of his wisdom with us today. So Christian, thank you for being here.
Thank you very much, Robert, for having me, and thank you to iGaming NEXT to set up something specific on investment, which I think is very interesting.
Indeed, indeed. And Christian, maybe you could tell us a little bit about your firm and your background in doing deals.
Sure. With great pleasure. So we are an M&A boutique, basically, so corporate finance M&A boutique specialized in this industry only. And we've been around quite a while. We did, I think, the first deal in '96. So since then, we've always been active on M&A going on in this industry, on the buy side, but mainly on the sell side. We've been historically representing medium and small companies that were engaging in some kind of transaction with larger groups or with private equity funds, so financial investor. So we're present in all the regulated market, in Europe, in North and South America, and we've been investing a lot in India, as we believe it's one of the upcoming market for this industry. We have presence in London, in Rome, in Madrid, and in Miami. And we basically, do M&A transaction in the core, so on the B2B, on the B2C, but as well as on the ecosystem, so fintech, affiliation, esport, technology, so everything that is within this ecosystem.
So let's cut to the chase. So what's going on let's break down the markets. Let's talk today about B2C, B2B. Let's talk about the state of capital and debt and equity related to these transactions. And let's try to put a little bit of crystal ball gazing into our future. Let's start with B2C. What's going on in B2C and how would you size it up?
So on the B2C, the main trend that we see is operators are looking more and more to enter new geographies. So this is an industry, one of the few industries that you have really to look at by single country. So there is no European legislation, there is no federal legislation in the US, so you really need to go market by market. So this is the first element. So clearly there is a general trend of growth where the international companies or companies in general are looking to enter new markets. And they clearly make the assumption, should I enter organically? I go there, I apply for a license, I set up my platform, my product and so on, my team, my marketing, or I should evaluate maybe to buy something locally, I acquire in once, team expertise, know-how, license, and so on, and then I grow from there. So this is basically the question that this company have been playing with. And what we see now is that clearly the choice or the preferred choice is to go with acquisition. So because of speed, because of limited risk, because of probably the benefit of a local brand, and clearly the know-how of a market, which is more and more important. So we see companies looking for any market. We have people coming to us and say, I want to go to any regulated market. Europe, North America, South America, kind of doesn't care at the beginning, then it cares. But, conceptually the interest is to enter a market where they can say, okay, we have made an acquisition in this market has an interesting outlook, we are there overnight, and then with our power, whatever they have, marketing power, brand, technology, we're going to grow from there. So this is a trend that we see in a number of jurisdictions. So in all Europe, we see this.
Let me ask you a question related to that. So you kind of framed buy versus build. Your view is clearly that companies are not going in organically. The easiest way for them is to go into a market through M&A. That would imply that it's more cost effective to them. Does that imply or suggest that in B2C the valuations are lower than they could be? Or the deal multiples healthy?
I don't think necessarily. I think more that the perceived risk of going through the make, so through the organic, it's higher. And also in certain market, they consider that there is a kind of market has formed already, so to get in as a newcomer is extremely more difficult than it would have been a few years back. So now the only real option is to make an acquisition. And to talk about Europe, on top of that, you see that there are limited opportunity to grow on an organic base. And this is basically related to level of advertising limitation that we see in different markets. So you say, I have to go through an organic growth. On top, it's going to be even more difficult for me because the way I can use marketing is limited, as it, if I compare it with 3-4 years ago. So, it's going to be even more risky for me. So let's go on the kind of the safest side of the spectrum and go for an acquisition. And we don't see particular discount on multiples. Actually, we see that the regulated market, fully regulated market, multiple are increasing. And probably you guys have seen this in the last transaction in Europe, over 10 times.
Oh, sorry, over 10x average multiple for B2C
average,
operator.
no, but we have seen some transaction over 10 times.
Right. Okay. So, and in terms of where the B2C side is moving, do you feel when you've been involved in some of these deals that the different characteristics of, say, a U.S. or a Latin American opportunity bears weight in terms of coming into these markets?
Absolutely.
And how does that do so?
Absolutely. So companies that are experienced, in this industry, they look for the young market where that growth, that margin that they used to benefit in their home country is not there anymore.
Right.
But they are in the young upcoming countries. So US, yes and no, because US is a different game because of size, but definitely Latin America is one of them. So people recognize some dynamic that they couldn't see in other markets 5-10 years ago, now happening in Latin America, mainly Brazil, but also Colombia, Mexico, Peru, even Argentina. From an industrial point of view.
But
so
before we get to Latin America, let's first go with the US or US and Canada, where post-PASPA, and this has come up today in this room before, post-PASPA, we've seen an explosion in sports betting operators. There's a more limited number of iGaming operators, so the compact from a B2C perspective is different than many other jurisdictions because you've got sports betting on its own to a great degree. You've got significant concentration amongst the leading players, making it perhaps harder for some of the niche players or the smaller players to maintain value or retain a business going forward. And that's resulted in a little bit of a cooling off of some of the action than in the US. Maybe you can comment on that. And in Canada, before you get to that point, in Canada, in Ontario, you've got 45 operators currently who are doing, iGaming, sports betting, or both.
So as you say, this is the beginning. So we see the dynamic of a beginning of a market where it tried to take its shape and form. I think we're very much at the beginning. So we'll see probably some other company coming in US. Fanatic is one that is coming. But the element of US is size. This is really a market only for the big boys. It's very difficult to take a position and to be sustainable business as a medium small company in any state. So we'll see a little bit more of that shape, and then we'll probably see concentration that we've seen everywhere else. The same for Canada. This is the moment that everybody's come up, but there are going to be very few companies that are going to have a sustainable business model. So there will be, a natural normalization of that market, and probably you're going to see some concentration. We start to see some companies say, okay, we open now to evaluate if somebody want to come on the market through us. We're not really profitable. We're not going to be in the next 3 years, but we have a position into the Ontario or Canadian market in general.
Do you see the consolidation in the US and Canada slowing down now? Or do you think you alluded to Fanatics with PointsBet, which has now got a competing bid from DraftKings, that's kind of, something that's relatively at scale, but this is a pre-cash flow company as well.
Oh, yeah.
So, how do you see that?
I see that's continuing on that path. So companies are looking for targets that take a position in the market. So at the moment, the cash flow positive is not the issue. The issue is to take position. And then the idea is that then it's going to be one of the few, and at a certain point, those companies are going to make money. That's the approach of the Fanatic of this world.
Right.
So we'll see. But this is again. We are at the beginning, so it's an acquisition to take a position. It's not yet a consolidation, I believe.
What about sources of capital for, I mean, do strategics generally, do they have the balance sheet? What's going on in the debt and equity markets? Are we going to see new issuers? Those, cost of capital, what are you seeing when you're packaging these deals?
The majority of the transaction we see is really on their balance sheet.
Yeah.
Maybe with some support of, some debt, but it's kind of let's call it a commercial debt.
Right.
So then if you go to the next level, like the multi-billion or, the billion over transaction, then clearly there is a different capital structure to do the acquisition. But the majority of what we see
like
now...
the Entain
Yeah, like
deal
the
we just
Entain
seen.
with the capital increase.
Yeah.
But otherwise, just below that, it's all on mainly on the balance sheet with maybe some, traditional debt.
And when you look at the market, do you see a strong enough balance sheet situation with the larger strategics to sustain a large M&A volume?
Yeah, normally yes. The one that struggle a little bit are the one that listed, not because of their industrial fundamental are not good, but because clearly the stock market are not being helping them, let's say. But otherwise, majority of buyers have a very strong balance sheet, and they can do like a number of acquisitions, and that's where they're going. They asking more and more to their boards to have resources to do M&A. You'll see this in a number of communication of companies in these sectors.
So let me unpack that a little bit. So you suggest that for private companies, you suggested that for public companies you're seeing less action, more on the private side?
Yes, definitely.
And what deal size are you referring to?
Well, this is our deal size, definitely on the private sector. That deal size between probably the 20 to the 200, something like that, in that range.
Yeah.
I know it's a big range, but that's the range. When you go over that, like the 250, the 500, then you see either credit fund helping companies, a more sophisticated capital structure. Let's say.
Yeah, refinancings. So,
Yeah.
And so let me ask you a question. What kind of deal structures are you seeing and deal terms in some of the deals? I mean, are these paper? Are they, and let's parse between public and private.
Yeah, so two things. We see the majority cash, so very little paper, unless the buyer is listed and there is a logic for them to, for the seller to accept cash, to accept the paper, so to accept shares. Otherwise, the structure we see is very similar. We're asking ourselves, is us imposing this structure or is actually the same? Is that 51% day one, and then normally the buyer wants the seller to stay for at least 3 years because that's what they buy into. I'm going to a jurisdiction, I want you to stay and help me to grow over there, so I want you to be motivated to stay and to grow the company. So we see normally 51% and then several ways of basically going up. In some cases, the sellers stay with 20, 25%, and then they have at the end of the journey, which could be 3 to 5 years, a put option, and then everybody's happy.
And you're seeing earnouts?
Yes, we see earnouts very much. Very much. We see companies don't want do a super negotiation on what's going to be the business plan. So that's why they put an earnout. If you do what you say, you tell me that you're going to do, then you're going to get your value. Mm-hmm. So that's kind of on the risk level. It's decreased the risk of the buyer very much. And everybody believe that, all the sellers say, the best has to come. So, that's a way where there is an alignment of interest between buyer and seller.
So we just had, you talk about the balance sheets being strong. In addition to that, there's been some discussion around both equity and debt markets in gaming being quite challenged right now, and there not being a lot of capital available for regulated gaming companies on the private side, on the private credit side, and then finally, if we look at on the public side, the issue of ESG compliance we've just talked about in this room, and the allocators not being that interested in the gaming industry per se. How do you see all of this with your lens on, and in terms of how the future will evolve? Will some of these folks, will this change? How does the industry adjust to this and be able to grow?
Look, we see on the debt side, we see, capital is available on the debt side. It's available from credit fund, also from banks. The point is that we have seen that a number of companies are not really prepared in-house to engage the relationship with the banks in order to, at the moment that they need it, they have the relationship and then they're able to activate that relationship, in order to have them in a capital structure. I need to do a 300 million acquisition, I need at least 100 million of equity. But if you have zero relationship, if you don't have that been nurturing that relationship, it's very difficult. So when they do, actually, it's very easy because normally the targets are very strong from a cash flow point of view. The buyer is very strong from cash point of view, and as you know, the banks, that's the only thing they care of. So on that front, we haven't seen. Where there is definitely a gap is on the equity side. Mm-hmm. So equity is very difficult. So that's why the majority of deal we see is either all balance sheet of the buyer, so of the company, or debt plus a little bit of commercial help.
Why do you think that's the case?
I think is a culture element. So I don't think we have been good enough in this industry to educate the equity investor in this industry. They really don't understand the fundamental. When I speak with a private equity fund, and I'm talking about like big names, I spend majority of the time to explain what GGR is, what turnover is, and the fact that actually it's not an industry of mobs, but actually you need a license.
Yeah.
I had like big private equity. You really need a license to do gaming? Yes, you need a license. So again, I'm exaggerating, but we've really not been good in educating that industry. That actually could be a big support to explain the fundamental dynamic. We've been kind of in our little bubble.
Right. In other words, you own more than 5% of a gaming company, you need to be licensed, or you set up a debt plus warrant structure or whatever you do. But it takes you time to educate them, and it scares them off.
Well, I have to say that I tend to see that through the training, actually, they open their eyes a little bit more, so they're kind of mentally more open to look at transaction. But then they say, we are generalistic fund, and we have to look at so many things. This requires so much resources from us to understand it. So they kind of...
So often the case, trying to get people interested in our industry.
Yeah, very much.
So let's turn to, you mentioned Latin America. Let's turn to that just for a second, because that seems to be the hot potato people are discussing.
Very much. So,
and is that B2B and B2C? Because we're about to start to talk about B2B as well.
Yes, B2B followed B2C, so by definition. So yes, operators all over the world are looking to Brazil as a kind of a very attractive market from a number of main elements. So size, clearly, penetration of digital and mobile, which is extremely strong in Brazil, and obviously their love for sports and football and their media engagement with their world. So plus the demography, which is a young demography. So this is a perfect, obviously, it's a perfect situation. So there is this, I'm not going to go into legal, but the point is that there is a possibility to grow an offshore company in Brazil now in a visible and most of lawyers would say in a legal way. So you can go there, invest, do your marketing, and offer your product and services in Brazil, and you have a payment solution that will support your business. So you can definitely grow a business in Brazil. On top of that, there is a regulation which is definitely somehow coming, either a federal level or a state-by-state level, which actually will make go to the next level. So of having kind of a stamp and says, now this is fully regulated, these are the rules. And, this is 80 million people market, so it's gigantic.
So there's this euphoria, yes, and I agree with you. What should we all be thinking about on the caution side with all this excitement about Brazil?
Well, the point, and that's where we position ourselves, is that this is a difficult market, so you really need to understand what's going on. And in our view, the only way to understand what's going on is to have a local partner. So somebody that knows how to navigate the media environment, the legal environment, the political environment, and so on. So with the local partner, it will be possible to get to the end point, which is now I have a license, now I'm okay for 10 years, I can operate in transparency, following the rule that they gave me, like any other market. So the point, how are we going to get from where we are now to there, that's the unknown. And that's where you need the local partner to do it. But our view is not to wait that there is a license. Now is the moment, in our view, to invest in Brazil. So now is the moment to find that partner, to start to make an acquisition with a team, with a brand, or whatever it is, and to go with them through this journey.
Yeah, or miss the boat.
Or miss the boat.
Let's talk about B2B. What's going on in B2B?
Same thing. So we see definitely an integration. So where the B2B provider are growing by size, so there is a consolidation, and also the integrating by product. So people that were doing only casino or slot before, now they have a bingo offering, a sports betting offering, and maybe in some cases they have an omni-channel offering where the same product now can go into a gaming hall or a betting shop and so on. So this is, again, coming back, is done through, okay, I'm going to take a bunch of developer and I will develop, my own platform, I will develop my own bingo game, or I'm going to buy a company that I can integrate in my technology or not, or I'm going to keep separate, but I'm going to be able to go to my client and say, I'm able to supply you all the range of product and services.
So what's the hottest ticket in B2B? What is everybody looking for right now?
We see people are looking mainly for PAM. So they're looking to have their own platform, the one that don't have it. The one that have a PAM are looking for a betting vertical. And the other element is to have a module where they can use, based on the different jurisdiction, the same product and services, both digital and land-based.
Okay.
When and where possible.
Right.
On the gaming side, we see clearly an integration of portfolio, but it's more, I want more kind of stuff. Here is, I need really to have my own core, or be able to supply my customer my own core, and potentially, betting, because it's now well known that the acquisition of player for the operator is much cheaper with betting. So if I'm attracting them through betting, then I'm selling them gaming product. To give an example, Brazil today, they only advertising betting. All the brands is about bet. All the P&L has 80% gaming. All the P&L are 80% gaming. Nobody mentioned anything about gaming. It's all about betting, sport, soccer, and so on.
Yeah, well, that's classic the world over, which iGaming carries the margins and the weight, or gaming if it's land-based as well. So what's happening in B2B with multiples in the different segments? Content providers, there's a lot of people here who are content studios or providers. PAM, there's a limited number of PAM suppliers in the world. What's happening there? Live casino, different tech, payments. Maybe you can take us through journey of multiples.
The point is integration, so kind of an horizontal integration on all product. So we see a lot of companies being approached by the medium big ones for an integration. It can be an acquisition, can be a merger. We've just done a merger now between a gaming and a betting company. One of the very few real merger we have seen in this industry. So it's really, I want to acquire in order to increment and intensify the offering I can have towards my client.
Yeah.
And then the other thing is, in certain market, you need a kind of a specific product, either because there is a specific taste in the product, or because the rule of certification or rule of rule. For example, Germany, you need to have a different slot for Germany today. So this element, again, when you go back home and you say, what do? We develop, or we find something to buy that would quickly give us the entry to the market.
And multiples, can you maybe give us a bit of guidance there? I think folks are all wondering, what's a content studio worth? What is you've got Games Global which is 45 studios based on, quickfire. What's a content studio worth in that, in that context? There's 500 game studios?
Oh, yeah.
How much is a game studio worth?
So what I tell you, when we are on the sales side and we sell a gaming studio, we sell it on two elements. One is the technology, no revenue, just technology. So in order to build this, it will take you X amount of million.
RGS or whatever.
Whatever. So there is a value, even though this doesn't generate €1, or actually it consumes, there is a value. And then there is the contract value. So this company have a number of contracts, clearly generate revenues. And that's where it's very important to be careful, because we have seen a number of transactions that didn't happen because within this contract, there were some jurisdictions that were not acceptable for buyers, which now are more and more picky in their due diligence, in their risk management, and so on. So to be sure that the studio is positioned clearly on any market. You want to go on the black market, you want to go on the gray market, you want to go on the white market, but you need to know that any of this color have a different multiple. So this is the story. Or separate the business, because there are a number of companies that would be just interested in the asset because they have the client.
Right.
So they just want,
So it's hard to ascribe a specific multiple. Is it 6x, 10x, 20x? Generally speaking, B2B multiples you're seeing at a premium over B2C, I presume.
Yes, if it's white, it's definitely over 10. Definitely over 10, yeah.
Okay.
We see that also structure with earn-outs all the time.
Yeah. So let's move on to that. So the structure of some of the deals you're seeing in B2B, probably mostly private deals.
Yeah, mostly private
How
deals,
are those manifesting themselves?
Again, the motivation is to get into new market where these companies are through their clients. So, for example, talking back about Brazil, there is a company that has exposure in betting and gaming, supplying betting and gaming operators in Brazil. And now, if you want to go to Brazil, that's an interesting target because they supply, I don't know, 3 of the largest operators in Brazil. So that's one of the motivation. The other one is really, my suggestion is really to be careful on the content of the contract. We have seen more than one deal, actually over 3 deals that didn't happen, not because they didn't like the technology, not because they didn't agree on the price, but because of the risk management of certain contract, B2C, B2B contract in gray market where everybody has an opinion because there is no a clear cut.
In other words, if the company has been infected from a previous set of conduct in a non-compliant market, that's cut their nose off from being able to do a deal.
Or
so you can't, you can't erase your history, and it
exactly.
adversely infects.
And you have to be careful what kind of client you have today.
Yeah.
Or they're going to say, you know what, I don't want your client, I want your technology. So sell me just the technology, an asset deal, almost an asset deal.
Right.
Because otherwise, the appetite for risk, we see it clearly decreasing.
Appetite for?
Risk of gray market, let's say.
Of gray market, you see that decreasing?
Decreasing.
Interesting. Okay. And black market, of course.
Yeah, black market.
Off the charts.
Off the chart.
Yeah, I understand. So so that we talk about studios. Let's talk about other segments of B2B, PAM, payments.
Live dealer.
Live casino, yeah. Maybe you could talk about how you see that evolving. I mean, live casino seems to be a really strong demand.
Oh, yes, there is.
But,
increasing
to
demand.
Mimic Evo.
Increasing demand, clearly a leader in the market.
Yeah.
So, but we see some kind of small company coming up, differentiating. Obviously, the access to technology is much easier now than it was when Evo started. So we see that there will be a number of small studios, probably that will be acquired by larger guys that just want to have their own solution, not just reselling Evo or Playtech or Pragmatic or whatever. So we believe that some of them are going to be able to erode some market share from the big guys, mainly because of the technology access that now is much easier than before.
So going forward, what do you think are going to be the hottest targets for strategic acquirers in B2B?
It will be companies that have clearly a very strong technology and they've positioned themselves clearly in the market. So, there is a clear positioning of their B2B solution in the market. Whatever they do, slot, live, geographic, specific angle, but people are looking buyers are looking for, I'm doing this acquisition because it's going to give me access to something in particular, either a product or a market. So that's the main motivation.
So when you think about that, what are some, in terms of the hot areas, what's the other side of that? What areas have cooled off? If you're an entrepreneur and you're looking to start a company and you want to sell it to someone and get an exit based on getting yourself and your investors a return, where should you start that company today with hopes of being acquired versus where shouldn't you?
Well, today is difficult are the more mature market that are also start to be more tough towards their operator, UK, Scandinavia. So it's really tough there for the existing one. So
that's in B2C or B2B?
Both, I would say. Both.
Yeah.
B2C, but also B2B. So it's really tough to launch a new brand in those markets for sure. Now, what we see is clearly Latin America in general. Brazil obviously is a star for a size, and we are trying to push people to invest in India. India will, at a certain point, emerge. Today is kind of floating on the regulated side with poker and fantasy and so on, but is too big to ignore. It's a 300 million people addressable market. So something going to happen there. So it's kind of a dormant giant, and when it's going to wake up because of regulation, it's going to go at an incredible speed. So the company that will have positioned themselves in there will have an enormous benefit.
So the message in all of this is we have to start looking outside of the US and Europe. We have to look at India and Latin America to really grow the business, and that's suited to people who are able to do that.
Somebody has also an appetite for Africa, which is it's regulated, or majority of the states are regulated, but you need to have an appetite, which means you need to really find a local partner that is the right partner to grow a business down in Africa. But that's a growing continent on all fronts, so that's an attractive market as well.
So going forward, are you neutral, cautiously optimistic, or exuberantly optimistic?
I would say between cautiously exuberant and optimistic, but definitely the growth is there. I can see it every day, so for sure.
Fascinating. Christian, thank you so much for your time.
Thank you very much, Robert.
Really interesting, and enjoy the rest of the event.
Thank you very much.
Thank you for staying to the end.
Thank you.